Hello, it's Isma. Today we're going to look at some of the things that you should look for before you should start trading. In other words, what are some of the things that I should look for, that you should look for, that you should first do before you enter for a trade? That is, before you buy, before you sell. My name is Sewankambo Isma. I do welcome you back to my YouTube channel. Thank you for liking, subscribing, sharing, and commenting on our various social media platforms, that is Facebook, YouTube, Instagram, and TikTok. Well, without any wastage of time, let's get directly onto what we're supposed to see today. Like I've told you at the beginning of this video, we're going to look at a couple of things. Rather, we're going to look at things that you should do, things that you need to first pay attention to before you enter in for a trade, before you buy, before you sell. First, before you buy, before you sell, you need to first identify the trend in the market, because we all know as the markets are moving, they're either moving within a trend or they are ranging. So before you buy, before you sell, you need to first know the structure of the trend. By this, I'm looking at things that you should ideally do for you to identify the trend in the market. This is where we see the you deploying the moving average. It can be the 50, it can be whatever couple of rather pairs of moving averages you can use here and there. So the main importance here is to find the most appropriate instrument, the most appropriate ways of how you can identify the trend. Because at the end of the day, for you to buy and for you to sell, to make a profit, you need for you to make a certain profit on a certain trade, it's important for you to know the trend. So before you buy, before you sell, you need to identify the structure, mainly the structure of the market, but mainly the trend of the market. So it's important for you to tell that this trend is upwards, rather going up, trending upwards or downwards, by the help of a couple of tools, a couple of indicators, a couple of oscillators, and different techniques that you can use for you to identify the trend of the market. After knowing the trend that you are trading in, the next thing that you should look for should be knowing the support and resistance in that particular market that you're going to trade. It can be a forex pair, it can be a stock market, it can be an index, it can be a stock market or a particular stock, whatsoever that you're trading. So it's important for you to ideally tell that according to the way this market was moving at this point and this point, we have ideally noticed that this is the resistance, this is the support. Okay, meaning that knowing the support, whatsoever way, whatsoever technique, whatsoever type of trader, whatsoever style you are, regardless of anything, provided you can identify a particular point as a resistance or a support, it is a prerequisite. It's something very important. It is something that we shouldn't skip our eyes on, okay, before you buy, before you sell. Because in other words, when you're trading and you have identified a particular resistance, a particular support of a certain market or currency pair, whatsoever financial instrument you are trading, we literally base onto that to place our stop orders, to place our entry orders, and our take profit order. Okay, orders, right? So we find this very important, very affirmative, very helpful, okay, for you to identify the support and resistance. And at the end of the day, it's the support and the resistance that will ideally show to you that whether you should buy or you should sell. So before you buy the market, before you sell the market, or before you enter any particular trade on any instrument, you have to identify the support and resistance on that particular pair instrument that you are trading, like we have said. Now, after looking at identifying the support and resistance, okay, so the next thing that you should pay attention to is to identify your confirmation point, because we all know for you to enter in for a particular trade, it's not just a matter of you buying and selling after looking at a certain things here and there. So even though I'm looking at probably, let's say, trading with the Fibonacci, and I have my point A, point B, and point C being uh, the uh, the beginning of the new impulse move, I ideally need to first have a confirmation, something that affirms to me that, you know what, yes, you're going into trade, but you need to first, lastly, see such and such an occasion. In other words, before I buy, before I sell, before actually coming up with a particular strategy, that strategy should be with a confirmation, something that confirms that really this is now a perfect entry. The end point of what you're looking at or looking for in a particular pair instrument that you're trading, to affirm that now it's a clear entry, it's a goal for you to buy, for you to sell. Okay, so we need to identify our confirmation. Like, for instance, if you looked at the videos that I shared with you, looking at the candlesticks, we looked at you first having the prior trend, having the candlestick reversal pattern, okay, forming. Then lastly, you need to first have a confirmation, which confirmation has to either be a bullish candle or a bearish candle. So here it's working as a confirmation. So regardless of any strategy, any style that you are using to trade, there is always that something that will affirm to you, that will confirm to you that now everything that you've been waiting for now has been in place, and this is the last thing. And the moment you see it, then you can have your entry on that particular market. Like, share, subscribe. If you haven't clicked onto the bell, please do such that you do not miss out on most of our YouTube videos that we do share, and also comment here and there for assistance. And lastly, I can say, fourthly, the next thing that you should consider as your confirmation before you sell, before you buy, which is a confirmation, then we should also not forget looking at the fundamentals, because at the end of the day, if you're looking at only the technicals, you always, at the end of the day, have to look at the fundamentals. You need to see, what is happening on the new side of this particular instrument I'm trading. Okay, because you may probably, the technicals may tell to you that the market is going up, but the fundamentals are genuinely telling you that there is something negative or positive that is opposing to what you have analyzed, which may hinder you here and there making your profits and making a loss instead. So you need to look at the fundamentals. Lastly, I would say, before you buy, before you sell, or before rather you enter the markets, it's very important that you actually do the know the intermarket analysis. So you can do it, or you can probably know it. Intermarket analysis is actually something to do with probably the markets that have the impact or the influence over that particular pair that you are trading. So it can be an index, it can be the stock market itself. Like, for instance, I would say, if, let's say, I'm going to trade any pair that has Canadian dollar. So before I execute a trade, okay, we all know that Canada is one of those biggest oil producing countries. So in case there is uh, any influence, any effect from the oil side, it basically, or it fully affects Canada as a currency or as an economy. So when you're trading, you have to first look and see how oil is doing. Are you trading as per what oil is being traded as the way oil being traded? In other words, don't see a buy for oil and a sell for Canadian dollar. So when you're buying Canadian dollar, you need to first see that it's also a buy in the oil market. So they have a positive correlation, which we call the correlation coefficients when we are trading. So we are literally doing the intermarket. Although a couple of you are probably like, this is more of, economics, and you can't do this here and there. It's some bit of complications here and there. Yes, but it is something simple. It's actually knowing simple biography about a certain effects that affect a particular instrument that you are trading with the other. Okay, so like the example I've given you, oil and Canada. So you can also look at a couple of different, you can look at gold, you can look at timber, you can, a couple of, we're looking at the analysis from the other side of the markets regardless, rather besides the financial markets. So when you do this, when you put this into consideration, you realize that these your markets at the end of the day, the entries that you're going for, they'll be in position to yield you some good profits here and there because of you being prepared, because of you looking at these things which some people actually don't consider before they are going in for the trade. So they are put. So knowing this is actually putting you at a certain place, a certain point, which probably can make you profitable as compared to those that forego these things before they enter, before they probably buy or sell. So hope you find this video helpful. If you really do, please share it to your friends such that they also get this information and learn from us. And those that are finding difficulties here and there, please don't hesitate to contact us with the contact we provided at the beginning of this video. Mostly those that want to learn, mostly those that want help here and there, provided it is Forex or any tradable instruments such as crypto. We are here to help you. Please don't hesitate to contact us. Thank you so much. I do sign out. Bye-bye. Love you.